What is up, everybody, and welcome to episode 4 of the Bootcamp. I think we're on episode 4, right? 3, 4, 5? I have no idea. But anyways, today is the episode on liquidity, and liquidity is the foundation of everything we have to do with trading. Now, that being said, this is going to be a less traditional bootcamp video. This is going to be a lot of me yapping and a lot of you trying to understand the foreign language that I am speaking in. So please bear with me here. I got my neurogum in. I'm fired up. I even got gussied up for this one because this is literally the foundation of your education. So let's buckle in here. What is liquidity, you might be asking? And I don't mean liquidity like this water bottle here. I mean liquidity within the market. So the market is referred to as liquid because it is always moving. What gives the marker this liquidity is resting orders being filled. What the hell is an order, you might ask? Well, an order is just simply a buy or a sell contract that someone places that is being filled at a specific price. Who is this someone that you might be asking about that is placing these orders? Well, guess what? They're a lot more important than you, and they're a lot more important than me. And we are on nowhere near the level that they are. Who are they? They are banks, they are hedge funds, and they are massive institutional traders that are trading with hundreds and hundreds of millions of dollars. Our single contract that we trade when we're day trading futures that's worth about $250. Well, guess what? That is irrelevant in the grand scheme of the market because these people are trading with, like I said, hundreds of millions of dollars. So if they enter and they put a contract in for that much money at a certain price, that is literally going to move the direction of whatever they're trading because they have so much money that is filling these orders, sending market liquid in a specific direction. Now, why is this relevant to you, what the banks are doing? Well, guess what? We trade something called ICT and Smart Money Concepts. And what Smart Money Concepts seeks to do is to follow the clues or the signs that these institutions leave behind that liquidity has been filled and the market is going to be moving in a specific direction. And we try to follow that, and that is how we trade. So this is why it's important to be able to pick up on what liquidity is and where it lies. Now, that probably sounded like I'm speaking Korean, and I'm sorry, but I am not Korean. That is just day trader terminology. So the reason this is relevant to you is because we are going to be using this liquidity every day because, like I said, we're following these orders. So you have to know where liquidity lies in order to follow these. So I'll be getting specifically more in depth into where this liquidity is in a later video, but I want you to understand how it works first. All right, so let's get into how liquidity is actually used. Now, I'm going to be going more in depth into this into a lot later videos, but let's just say liquidity rests right here at this high, and the market goes up and it hits it. Now, let's say there was a bunch of sell orders at this high, known as the liquidity there. What that liquidity can do, because there's so much selling pressure, there's hundreds of millions of dollars at this high, is that could send the price lower. So liquidity lies in a few areas. It lies at highs and lows. It lies in fair value gaps. It lies in order blocks. It lies in all these different places. And you're going to learn about these places individually. But all I want to cover in this episode is how and why rather than where and what. So just understand liquidity is the orders that are much more important than you. And you will never be nearly as important as liquidity in the stock market. That was sarcastic, but you get the gist. So we will use these signs and we will use these liquidity pools to see something that's referred to as a liquidity sweep. Because when you see liquidity get swept and you see a couple other confluences, you know which direction price might go into because there's a lot of liquidity lying in these specific areas. We get into that in the later videos. I just want you to know what we're going to be dealing with for the future. All right, all that Korean being done, I'm just going to recap what was important there in a brief 30-second rundown. What is liquidity? Resting orders. Write that down. Liquidity is resting orders. Why are these orders important? Because they are worth hundreds of millions of dollars and they are what send price in a specific direction. Who puts this liquidity there? Jewish people. No, that was a lie. Don't cancel me. Banks, hedge funds, and institutions. Not Jewish people. Anyways, that's all you needed to know. What liquidity is, who puts it there, why it's important, and later on throughout the rest of this bootcamp, we'll figure out where it lies and how we use it to take our trades. But you have gotten down 3 of the 5 steps that we have gotten down. What, who, then we'll get into the where and how later on. That was 4. I totally fucked that up, but you get the gist. All right, everybody, that was all I had for today. I hope that wasn't too nerdy for you, and I hope you're not scared away from trading, because trust me, it's not as complicated as that just sounded. I probably worded that way too complicated than it should have been, and it's going to be a lot simpler because we're going to be focusing on drawing lines and rectangles later, and that's what we use to trade. We don't use fancy Jewish liquidity. You get the gist. But I hope you enjoyed. Free Discord in the description where I live trade every day for free, and keep going throughout the rest of this boot camp. Don't let this scare you away. Trust me, it's not that deep, and we will go on to the how later on. Have a good day.